Now, as the world remains locked in the higher for longer interest rate narrative, hopes remain for an easing in the second half of the year. Nigeria's central bank, in the meantime, has hiked its interest rates by 200 basis points to 24.75%. This as inflation remains sticky at a near three-decade high of more than 30% on an annual basis. Now, Lourens Harmse, who's head of Africa trading at RMB, joins us with great perspective on the West African nation's interest rate trajectory. Lourens, always a pleasure. Good afternoon to you.
Good afternoon. How are you doing?
Well, thank you so much for chatting to us. Let's talk about this inflation picture in Nigeria. We know that the world has been in this big, inflation fight, but it looks like with Nigeria, the reforms that were implemented in terms of forex and in terms of the fuel subsidy really put more pressure on their inflation story.
Yeah, correct. I think, as you alluded to, the fuel subsidies has always, for years, been a contentious point from a fiscal perspective. And I think since we've seen the new government coming in, President Tinubu, and since the new central bank management took over, I think we've seen not just talk about reform, the reforms actually have been slowly but painfully, in certain circumstances, put in place. So it's undeniable that the impact of the FX deval has a big inflationary impact in a country like Nigeria, which is heavily dependent on imports. But I think in the long run, we've seen the reforms being very well received from an international investor perspective. And I think the stability of the FX going forward and the ultimate inflows that come from the stability and the reform on the back of this will be very beneficial for Nigeria as an economy in the long run.
Lourens, I want to speak about, where we are seeing this Nigerian inflation. I think the latest print in February came in at 31.7%. Where are we in the curve here? Are we expecting it to still increase? Has it peaked? Or is it still very uncertain what might still happen with that inflation trajectory?
Look, I think from a outlook perspective, we seem to be at the high levels, just given these are obvious feed through from the previous deval we saw in June last year and then subsequent devals. And I think given that FX has probably overshot and we've seen it retrace quite a bit, these levels are probably towards the high end. But again, as you mentioned at the beginning, I think the central bank has changed to a more conventional monetary policy of inflation targeting amongst many of the reforms. So they are adamant and quite focused on getting the inflation back into their range. They've set a target range, although that's probably not in the projection for the next 12 months. But in the long run, certainly this aggressive stance on rates, very tight liquidity management, definitely has the right longer-term impact on inflation.
I'm also keen to get your thoughts here on the issue around investors. You have said that globally investors have welcomed these reforms, Lourens, but what we're also seeing is companies that are already invested in Nigeria really reporting losses. If I think of just MTN, for instance, that are highly invested in Nigeria, are really taking a huge hit here. Is it understood even from those companies that have a strong footprint within the country that there is this short-term pain and that on the other side, things should be better?
Yeah, I think it's a needed pain that has to come through, but you need a healthy economy in the long run for any business to thrive. So the long-term view that we're hearing from an institutional investor side is that Nigeria's turned the corner. I think more broadly speaking, Africa seems to have turned the corner. We've come from pretty much inflation has been topical, fiscal issues have been topical across Africa. So I think on the one hand, investors are looking for a good story, but this is actually a good story in the sense that this creates an environment for businesses to project forward when you think about the unification of foreign exchange rates. So I think there's always been multiple exchange rates and a lack of clarity, and you've had parallel market rates. So even for corporates in country, it's been difficult to manage their exposure. It's been difficult to project and budget So they almost had no alternative way to manage that risk. Where we're seeing the trend now is rates have unified, the market's trading actively, we're seeing interest from local banks to start showing more liquidity in alternative ways to manage currency exposure. So from a corporate perspective, I think it gives businesses that are already there and businesses looking to put fresh inflows into the market a lot more comfort that they can actually manage their risks better than they have been able to in the last 3 to 4 years.
What we also know, Lourens, is the issues like inflation, interest rate, those aspects always have a negative impact on growth. I'm keen to find out what you're pegging Nigeria's growth for 2024 to be as a result, and some of the levers that might work in the favor of the economy, irrespective of this difficult environment.
Yeah, so it's still going to be sort of in the low 3% ranges. I think just given, obviously, as you've mentioned, these interest rate hikes and inflation do drag on the economy quite a bit. But in terms of projects coming online, you've got the refinery, you've got the downstream impact of rebalancing towards producing oil, producing refined product, etc., and starting to export some of that and diversifying the foreign exchange earnings to a certain extent. I think that's a big focus also for the government and for the central bank, is to solve the supply side equation to FX, and by businesses growing and actually starting to produce and export, those industries will benefit. As I say, I think the key to a lot of the growth and investment is just stability in the market. So as much as these things hurt in the short term, the absolute levels don't necessarily always matter as much as the stability around managing the exposure.
And also, before we actually depart here, let's just talk about buffers for citizens. We have seen strikes. We know that expectations are also a very key driver in what happens with inflation there. Has government put together some sort of packages for relief for ordinary people within Nigeria, Lourens? And is that meant to maybe even influence the expectations around interest rates?
Yeah, so there are certain initiatives that are either in play or planned. I think the difficulty for government at the moment to manage is the balance between correcting the fiscus, so removing fuel subsidies and then adding different subsidies is always a difficult element to balance. I think we've seen their debt stock grow quite a bit. So that's something they have to be cognizant of. But as you say, it's been a really tough couple of months for people on the ground. But ultimately, I think the government has certain initiatives planned. But I think at this stage, they're just balancing the size and the impact on the fiscus at this stage.
Well, it's been a pleasure hearing from you this afternoon, Lourens. Thank you so much for taking us through this one. That was Lourens Harmse. He is Head of Africa Trading at RMB.